If you are receiving Social Security right now, stop what you are doing and watch this entire video, because what I am about to tell you is not something the SSA is going to put in a letter. It is not something your bank is going to call you about, and it is absolutely not something the federal government wants you to know before it happens to you. There is a direct deposit crisis unfolding right now inside the Social Security Administration, and it is already hitting retirees across this country with zero warning. We are talking about benefit payments that vanish into a processing void, routing numbers that bounce back to the Treasury while your landlord is waiting, and a new identity verification system that is locking seniors out of their own benefit changes at the worst possible time. And I promise you, by the end of this video, I am going to show you the single most dangerous trap inside this entire situation, the one that nobody is talking about, the one that is already wiping out entire monthly checks for people who did absolutely nothing wrong. Stay with me, because that piece of information alone is worth every second you are about to spend here. Right now, in 2026, the Social Security Administration is operating in a state of serious administrative stress. Here is the documented reality. DOGE-driven workforce reductions have cut thousands of SSA employees. Field offices across the country have been shuttered or reduced. Only about 46% of calls to the SSA are currently being answered, according to testimony delivered directly to the United States Senate. Former Social Security Commissioner Martin O'Malley went on national television and told the American people he believed the system could collapse and produce interruptions in benefits. The agency has disputed that framing, but here is what is not in dispute. Processing times have slowed, backlogs have grown, and the first people who feel those backlogs are not bureaucrats. They are the 75 million Americans who depend on a Social Security deposit showing up on a specific date every single month. Now, layer on top of that a set of new procedural rules that were implemented starting in 2025, rules around how the SSA handles direct deposit changes, and you have created the conditions for a financial emergency that millions of seniors do not even know they are walking into. Let me break this down precisely. In March of 2025, the SSA rolled out a significant overhaul of its identity proofing requirements. The stated purpose was fraud prevention, and the fraud threat is real. Account takeover fraud, where criminals redirect Social Security payments to accounts they control, has become one of the most widespread forms of Social Security theft in the country. The SSA's response was to tighten the process aggressively. As of the 31st of March 2025, the agency began enforcing mandatory identity verification before processing any direct deposit change. If you want to update your banking information, you now need either a verified My Social Security online account with completed digital identity proofing, or you need to appear in person at a field office with a government-issued photo ID, your new bank's routing and account numbers, and either a voided check or a letter on bank letterhead confirming those numbers. That sounds manageable, except for one critical problem. The same DOGE restructuring that made these new verification requirements necessary also dramatically reduced the number of field offices where you can complete that in-person verification. In Wisconsin alone, one office cut its workforce by more than 58%. Nationally, wait times have stretched, phone support has thinned, and what used to be a straightforward phone update has become, for many seniors, a multi-week ordeal. And here is where the routing error problem begins. Because if you are switching banks, if you are moving from one account to another, if your old bank is closing a branch or you found a credit union offering better terms, you are now operating inside a process with a mandatory fraud hold window. Changes submitted online still require verification. Changes submitted by phone may trigger additional scrutiny and require a follow-up in-person visit. And here is the line that the SSA itself puts on its official direct deposit forms in plain language. Do not close your old account until payments have started coming to your new account. That warning exists for a reason. If your old account closes before the SSA has fully processed the routing update to your new account, the payment bounces. It gets sent back to the Treasury. And while it sits there waiting for the agency to reprocess it through an already backlogged system, you are waiting without your check. We have seen documented cases where this transition gap alone delayed payments by 30 to 60 days. For someone living on a fixed monthly benefit, 30 days without a check is not an inconvenience. It is a crisis. Now, I want to talk about the second major threat in this environment, and this one is more urgent than almost anyone is discussing, because there is something happening right now at the SSA that has the potential to take your entire monthly Social Security check down to zero with no warning. I am talking about the overpayment clawback policy. Here is the background you need. The SSA has always had the authority to recover overpayments, situations where they paid you more than you were entitled to receive. What changed dramatically in March of 2025 is how aggressively they are now recovering those overpayments. Under the prior Biden-era rule, the SSA had capped the clawback rate at 10% of your monthly benefit. That meant if they said you owed money back, they would take a small portion each month until it was repaid. It was imperfect, but it left you with enough to survive. Starting the 27th of March 2025, the SSA reinstated its full 100% clawback authority for new overpayments. That means if the agency determines you were overpaid, even for reasons that had nothing to do with anything you did wrong, they can now withhold your entire check, every dollar of it, every month, until the balance is repaid. As of April 2026, following significant public pressure and advocacy, the rate was revised to 50%, meaning they can now take half your monthly check. That is still catastrophic for anyone living primarily on Social Security income. And here is the part that should make your blood run cold. The SSA's own Inspector General documented that 73,000 overpayments in just 1 year were caused by the SSA's own calculation errors, not by anything beneficiaries did. The agency's automated systems, and this is a direct quote from the Inspector General's report, could not compute benefit payments due in certain situations. SSA employees had to calculate manually, and without adequate tools, errors accumulated. Those errors came back years later as overpayment notices. And now the people on the receiving end of those notices can find themselves with half their monthly check or, under certain automated system conditions, no check at all, until the matter is resolved through a formal process that requires navigating a system that only answers 46% of its incoming calls. There is a form that can protect you here, and most people do not know it exists. It is called Form SSA 632, the Request for Waiver of Overpayment Recovery. If you receive an overpayment notice, you have the legal right under SSA regulations to file this form and argue two things. First, that the overpayment was not your fault, and second, that recovering the overpayment would cause you financial hardship that violates the equity and good conscience standard under federal law. Filing this form does not guarantee relief, but it triggers a formal review process and, critically, it can halt the automatic withholding while that review is pending. If you receive an overpayment notice and you do nothing, the automated system will begin taking your money. If you file SSA 632 promptly, you create legal protection while the agency evaluates your case. Every beneficiary needs to know that form exists and exactly when to file it. Now I need to address something else entirely, and this is where we get to the most dangerous piece of the whole puzzle. This is the thing I told you I was saving. I want you to understand the intersection of the routing error problem and the overpayment system together, because in combination they create a trap that has already caught people completely off guard. Here is how it unfolds. A senior switches banks. They submit a direct deposit change through the My Social Security portal. The old account closes during the processing window. The payment bounces back to the Treasury. In a properly staffed SSA environment, the Treasury return triggers a reprocessing, and the payment arrives in the correct account on the next cycle with a short delay. But in a backlogged, understaffed SSA environment, that bounced payment can sit in a suspended state. Weeks pass. A second payment processes. Now the system flags a potential overpayment situation because of how the returned and reissued payment interacts with the new deposit cycle. The beneficiary had done everything they thought was right. They updated their information. They did not know their old account had closed too early. And now they are receiving notices about payment irregularities in a system they cannot easily reach because call wait times are severe and their local field office has reduced hours. This is not a hypothetical. This is the documented reality of how these systems interact under stress. So here is exactly what you need to do, and write this down. First, if you are switching banks at any point in 2026, keep your old account open with at least a minimum balance until you see the first full Social Security deposit land in your new account. Do not close it early. Confirm directly with your new bank that your routing and account numbers are correct before submitting any change to the SSA. Second, if you need to update your direct deposit information, the most reliable path is in person at your local SSA field office. Bring your government-issued photo ID, a voided check from your new account, and your Social Security card. You can call 1-800-772-1213 to schedule an appointment. Third, if you are updating online through My Social Security, make sure your digital identity proofing is complete before you begin. If two-factor authentication fails and your account locks, you will need phone or in-person resolution, which adds time to an already compressed window. Fourth, if you receive any notice from the SSA about an overpayment, do not ignore it and do not simply accept it. Request documentation of how the overpayment was calculated. If you believe the agency made an error, or if full or partial withholding would cause you financial hardship, file Form SSA 632 immediately. You can get that form directly from ssa.gov or request it at any field office. Fifth, and this is the proactive step that most people skip entirely, log into your My Social Security account at ssa.gov right now and verify that the banking information on file is current and correct. Do not wait for a problem to discover there is a mismatch. One digit wrong in a routing number, one transposed account number, and your payment will bounce with no automatic alert to you until you notice the deposit did not arrive. The system is under stress. The staffing cuts are real, the processing backlogs are real, the overpayment clawback exposure is real, and the routing error vulnerability is real. None of this means Social Security is going away. It means that right now, in this specific window of 2026, seniors who are not paying attention to the administrative details of how their benefits are delivered are exposed to payment disruptions that can take 30, 60, or 90 days to untangle. And for anyone living on a fixed income where every month's deposit is what stands between stability and crisis, that gap is not something you can afford. I want you to subscribe to this channel right now because this is exactly the kind of information we are watching every single week. The SSA policy environment is moving fast in 2026. The DOGE restructuring is ongoing. Overpayment policy has already changed once this year, and it could change again. The identity proofing requirements, the field office reductions, the processing backlogs, these are not static situations. They are evolving. And every time something shifts, there are seniors who do not find out until it is already affecting their check. That is what this channel exists to prevent. Hit subscribe and hit the notification bell so you get every update the moment it drops. And I need you to share this video right now with every family member and friend over 60 who is receiving Social Security. Not next week, right now. Because the person who needs this information most is probably not the one who found it. They are the one whose child or grandchild or neighbor watched this video and made sure they saw it. Forward this to them today. Their next deposit may depend on it.